A brand name pension fund you will stick with even if it's underperforming. Let's say that again. A brand name pension fund you will stick with even if it's underperforming. And there's been academic research done into why that is. Why would people rather lose money than actually make a decision? And there's several reasons for this. Some of the work has been done by Terence Odion out of the University of California at Santa Barbara, and I've written about it in my Financial Times columns 25 years ago. Some of the key reasons in no particular order are it's a brand, so you feel surely you can trust them. They're the experts. They'll come good eventually. That's what brands are relying on. Here's a problem. Who's behind those brands? Who do those brands go to when they want to communicate to you? Well, they sometimes come to me. I've had as paying clients American Express, their stock brokerage arm, when they wanted to reach out to retail clients. I've had Barclays Bank, Smart Investor magazine. I'd write in their columns. They even launched my book. I've had Investors Chronicle when they want to communicate to retail clients. I've interviewed their editors. We've done videos as a result. Now, that's not just a phenomenon of, oh, let's just use influencers. Let's think about that. Why is that the case? Because big brands know they alone don't have the monopoly on credibility and authority. So increasingly, they're going to pull in people such as myself, who are more authentic, who have their own brands and gaps to fill in the problems that the big brand pension funds have. But there's a problem. If you're not getting a performance, you're not getting a performance. Reaching out to somebody else to polish the brand isn't going to solve the problem of your underperformance by Vanguard, your underperformance by St. James's Place and the like. And trust me, sooner or later, St. James's Place are going to reach out to influencers and say, hey, because they've got a big brand problem. They're underperforming. The problem really comes down to how we all perceive brands in every area of life, whether it's KFC, McDonald's, Coca-Cola, things which could be killing us. It's a brand. We'll trust it. What we should be looking at is the bottom line. What difference does this make to me, whether it's in financial terms because it's a financial product like a pension, or in health terms? Blindly following a brand because you believe you could trust it. Well, history is littered with the problems of doing that. The brands essentially abuse their positions. And how do they build up those positions if they're not delivering on performance? Because they subtly make sure that performance is not the basis on which you're going to judge the brand. You're going to judge it on nice, polished website. Well, if you look at Berkshire Hathaway's website and they don't want anything from you, it's awful. It's appalling because they don't want anything from you. Their brand is not based on trying to trick you with nice, slick website or the millions spent on marketing. That's how brands are built. Commonality of views. Oh, I see it over there. I saw it over there. Therefore, I must assume they're trustworthy because I keep seeing them a lot. No, performance is on what basis they should be judged. So when smaller individuals such as myself who don't have the marketing budget and don't necessarily want to spend on websites like Vanguard's, but keep mine closer to Berkshire Hathaway's because we want to make the point it's not about the slick, smooth website. It's performance, performance, performance. That's how we compete with the big brand pension funds. So there is a problem that private investors will continue having. They will continue thinking the way they constantly do. Big and shiny, must be trustworthy, must therefore be good. They never said they were good. They're not even allowed to say they're good at St. James's Place. All they can talk about is how big and shiny they are. You're making the assumptions, and they can come back and say, well, you made those assumptions that we could outperform our benchmarks and indices. And then they'll change the goalposts in any event to make sure they're never caught out. My goalposts are really simple. Performance. That's it. Now I can show you the slick, shiny CV that I have, which is better than anybody working at St. James's Place. But that doesn't give you performance. It gives you great little CV. Performance, 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 performance. That's all you should judge me or anybody else on. Sadly, it won't happen. Here's another little trick they'll play on the performance issue, by the way. What they'll say is, oh, we did really well last year. Yeah, if you flip a coin often enough, you might get 5 heads in a row. That doesn't mean the coin is special or your flipping abilities are exceptional. That's statistics, and they're using statistics to fool you. Performance and consistency of performance. If you've liked what you've heard, like and follow for more, but more importantly, go to campaignforamillion.com/links. Actually, even better than that. I'm going to give you better than that. /free tools. /free tools. You're going to get a bunch of tools that, I'm going to do even better than that. Forget all of that. /free call. Go to campaignforamillion.com/free call. You see what I did there? Big brand ain't going to do that. They're not going to be authentic. They're not going to make mistakes. They're going to be slick. They're going to just edit bits out. campaignforamillion.com/free call. /free call. Go there. It's brilliant. You'll be able to call us for free. Any questions you have. Thank you.